It's early April 2026, while the entire world is frozen, staring at the burning horizons in the Middle East and absorbing every headline about the Iran war. Something is happening in the shadows of this geopolitical meltdown that could determine your financial destiny for this entire decade. While the mainstream media reports on Operation Epic Fury and the blockade of the Strait of Hormuz, behind the scenes on Wall Street, money is moving in amounts that will permanently reshape the AI sector and the semiconductor industry. Almost every retail investor is sleeping through these massive tectonic shifts right now, too scared to look away from the oil prices or the recent ceasefire in the Middle East. But look at the facts. In the middle of this chaos, partnerships are being forged and technological breakthroughs are happening that have the potential to turn smart, contrarian investors into the millionaires of tomorrow. This is not about quick speculation in the noise of war. It is about recognizing fundamental substance when everyone else is running for the exit. Today I'm showing you 4 stocks the market is completely ignoring right now. From the massive SpaceX IPO to the AI infrastructure revolution. Let's leave emotions aside and look only at the data. Let's go. So what exactly is the problem in the markets right now? When we look at the CNN Fear and Greed Index, we still see a worrying picture. For weeks, the needle was stuck in the extreme fear zone, one of the longest panic phases in recent history. Since then, the index has recovered slightly and is now showing fear, which is regular fear. But that is absolutely not the all-clear signal. It simply means the first shock has been digested. So why is this happening? Just days ago, Donald Trump warned in a dramatic speech that an entire civilization would die if Iran did not back down. Words like that whip volatility higher and push the average investor to liquidate their positions at the worst possible moment. But then, just 24 hours later, news broke of a 2-week ceasefire. Oil dropped 15% and market shot higher. Anyone who reacts impulsively to this kind of noise gets torn apart by the market. The Fear and Greed Index is your compass here. It combines 7 critical indicators, including the put-to-call ratio and market volatility, into a single value between 0 and 100. At 0, there is total panic. And historically, that is exactly where the opportunities that build real wealth are found. If you want to learn to be greedy when others are afraid, you need to understand what is really happening beneath the surface. But first, let's look at a true quality powerhouse that almost everyone is dismissing as boring right now. Microsoft. For the first time in over 13 years, the stock is trading at its 200-week moving average. Why does that matter? The legendary Charlie Munger always said that you beat the S&P 500 by buying quality stocks exactly at this line. Microsoft has fallen more than 30% from its 52-week high of $555. And yet the company is still growing revenue and earnings in double digits, with a net margin of nearly 40%. This is not a weak company, this is a quality stock under temporary pressure. And this is where it gets interesting. Let's look at what Liberty Stock Market says technically. The stock completed its sell-off exactly into the defined target zone, specifically the range between $362 and $374. It is now showing a first, cautious counter-reaction. Liberty is not yet calling this a confirmed bottom, but the technical logic is clear. What matters now is the formation of what is called a 1-2 setup in Elliott wave theory. That means only when Microsoft breaks above $413 does a potential wave 1 establish itself to the upside, which increases the probability that the low is already in. The operational logic is therefore first an observation phase, then confirmation through wave 1, and only then the actual entry at the bottom of corrective wave 2. The entry is not the first rally, it is the structure that follows. But there is an alternative scenario you need to know about. If Microsoft breaks below $341.5, the alternative scenario activates. In that case, further targets would come in at $310 and in the extreme range around $267. That would be a deeper, broader correction that delays the bottom process significantly. Below $341.5, patience remains the decisive factor. Now the big picture on the 3-day chart. If the main scenario plays out and Microsoft has found its bottom, the broader Elliott wave structure shows long-term price targets for wave 3 in the range of $719 to $803. That would be a potential doubling from current levels, with an intermediate correction in wave 4 around $583. before wave 5 pushes even higher. This is not a short-term trade, this is a multi-year investment roadmap built on clear technical structures. Anyone who has the patience to observe and wait for the right structure instead of blindly buying into falling prices is building the foundation for real long-term wealth. Now let's talk about a stock that many investors in Europe and especially in Germany hold in their portfolio but are struggling to make sense right now. Siemens. Yes, this is a German stock, traded on the Frankfurt Stock Exchange in euro, and it is one of the most important industrial and technological companies in the world. The stock has fallen more than 30% from its 52-week high of 275 euros, dropping below 200 euros at its lows. And this is happening at a company with nearly $80 billion in revenue, a gross margin of almost 39%, and a record free cash flow of $10.8 billion in 2025. The fundamentals are intact, the price is under pressure. This is exactly the setup long-term investors should be excited about. But what does Liberty say technically? The short term shows a completed wave structure to the downside. The correction has reached its target zone, the upward impulse has begun, and the first setup is active. Liberty clearly sees the current phase as an activation phase. Correction complete, impulse started. The next tactical opportunity is expected in the pullback of corrective wave 2, meaning a controlled dip before the actual upward move continues. The current stability level sits at 196.82 euros. As long as that holds, the main scenario remains intact. It is also worth noting that Liberty themselves added to their position in Siemens recently, which you can see right here in the portfolio. Now the big picture. On the long-term chart, Siemens has also formed a 1-2 setup on a higher wave level, laying the foundation for a new multi-stage impulsive move. This means multiple nested 1-2 setups are building momentum simultaneously across different timeframes. That is structurally significant because it creates a foundation for a strong, sustained trend. The long-term target zone, according to Liberty, sits between 361 and 400 euros, which would be a potential doubling from the current levels. No genuine trend-breaking alternative is visible in the current setup. Liberty puts it well. It is not the perfect entry that counts, but positioning yourself within an emerging long-term structure. Siemens offers exactly that setup right now. And on top of that, you collect a dividend yield of over 2% while you wait. Let's get to the next major story in the sector, Nebius. While everyone is watching the Middle East, Nvidia just invested $2 billion into this company. Nebius is not a conventional cloud provider, it is a full-stack AI infrastructure specialist built from the ground up for the demands of modern AI systems. Nvidia has essentially given Nebius its seal of approval. Together they plan to build 5 gigawatts of computing power by 2030, enough to power nearly 4 million households. Nebius also gets exclusive early access to Nvidia's brand new Vera Rubin platform. But it gets even bigger. Meta has signed a deal with Nebius worth a total of $27 billion. Analysts expect Nebius revenue to explode by more than 500% in the current year as a result. This is a contrarian opportunity as rare as they come. If you're enjoying this kind of deep analysis, I would really appreciate a subscription. It helps the channel massively and makes sure you never miss another one of these critical market phases. Thank you. One topic that most people are severely underestimating right now is the memory market. Google DeepMind has introduced a technique called TurboQuant that reduces the memory requirements for AI models by a factor of 6. Initially, stocks like Samsung, Micron and SK Hynix sold off because the market assumed less memory would be needed. But this is where Jevons paradox kicks in. When a resource becomes more efficient and cheaper, total demand actually surges because suddenly far more applications become possible. Just look at the raw numbers of Micron. Revenue has exploded by nearly 200% year over year. Memory is no longer a commodity. It is the critical bottleneck of the intelligence of AI models, and is the foundation on which all of 2026 computing power rests. Finally, let's talk about the story everyone is buzzing about, SpaceX. There are reports of a possible IPO this summer at a valuation of $1.5 to $2 trillion, which would make it worth more than Meta or Broadcom. SpaceX is, as many people do not realize, far more than just rockets. Through its close cooperation with xAI under Elon Musk, a conglomerate is emerging that spans space logistics, Starlink Internet and the Grok AI. When this IPO comes, it will shake the markets. But there is something I need to share with you. Because it costs most retail investors real money. SpaceX is an exceptional company, no question about it. But the IPO itself is a different story. The data is clear. A Nasdaq study covering thousands of IPOs shows that almost 2/3 of all new public companies underperform the market after 3 years. A study by Dimensional Fund Advisors covering more than 6,000 US IPOs from 1991 to 2018 reaches the same conclusion. The reason is always the same. At the IPO, hype is at its peak. Valuations reflect the hype, and early insiders sell into the enthusiasm of retail investors. The day of the IPO is typically the best day for the seller, not for the buyer. My recommendation: watch SpaceX, understand the business, and then wait for the initial hype to settle and for the stock to build a reasonable base. The best entries in major IPOs often come months after the first day of trading. We are in a phase where preparation determines returns. The fundamental data is pointing clearly upward, even if the geopolitical noise is loud right now. Whoever has a plan and works with the real facts will come out ahead in 2026. Before we wrap up, if you enjoyed this video and want more deep dive analysis like this, leave a like and subscribe to the channel. If this video gets enough support, our next one will be a full Rocket Lab analysis. That story is at least as exciting as everything we covered today. If you want, you can check out our last video about why the Iran war will make millionaires in the next 14 days, or watch our video about Novo Nordisk. See you in the next one. Bye.